Here's a quick walkthrough, kind of the technicals that I use and have been using, it seems like forever. I'm a big fan of the KISS, keep it simple, stupid philosophy, right? More is not always better. I think having 2 or 3 or 4 max kind of solid indicators you can lean on is really about, I think, all that you can handle for the most part, unless you have like a really deep automation system. So to kind of walk through it here, I had brought up Carvana, which was a trade I recommended for one of the services a little while ago here, based on kind of the technicals and the fundamentals. I bring in kind of a fusion approach, always looking at fundamental, technical, and always, because I trade options, implied volatility analysis. But from the technical standpoint, here is kind of the basic 20-day moving average, right? A simple moving average. And you can adjust that, right, edit that too. If you're trading a little bit shorter term, maybe you want to put that down to a 9-day moving average, even a 5-day or a 5 period if you're kind of a day trader. I tend to be kind of a intermediate swing trader, so 20-day moving average I think is appropriate. And I kind of mix up a little of the other indicators in a similar time frame, but just either a little longer or shorter. Here's the RSI, right? I use a 9-day RSI. The traditional is a 20-day or 20-period RSI. 80 is the overbought, 20 as the oversold. Traditional is 70-30, so again, you can mix that up. I use Wilders, which, I mean, you can use simple, you can use exponential, weighted, Hull. They're all going to be within shouting distance of one another, but it's just something to, take a look when things get overdone and then start to curl, right? As you see here, right, RSI got to an extreme, the highest reading basically over the past year, and then started to weaken. That's a signal maybe this huge rally, right, has come to an end. MACD is another one that I use. A histogram I like, instead I saw on your chart the crossing lines. Either one is fine. This is easier for no guy like me to see, but you can see MACD again getting to extremes here, and these you can also change as far as your MACD, the fast and slow moving lengths, right, and the MACD length as well, exponential. You can keep it simple, weighted, Wilder's Hull, right? So again, up to you. They're all going to be very similar. I happen to use exponential, always have, but basically what you're identifying is when things reach an extreme and then start to head the other way, even to the downside as well, right, where things did reach an extreme here, now starting to strengthen. As you can see here, we saw Bollinger percent B, one of my favorite studies, right, because it's kind of implied volatility based, right? So this is kind of a channel, and when it gets outside that channel, over 100 is overbought, under 0 is oversold. So you can see when things get overdone and start to revert, that's a good time to take a counter trend position as well. So I like Bollinger percent B because it's implied volatility based, and I'm an option guy. And then finally, here's implied volatility. Always factor that in, right? This is a generalized one. I'll take a more granular approach when I actually go to do the trade. But this gives me an idea, right? Implied volatility basically near the lows of the year, meaning options are cheap. Great time to be buying simple puts, right? Which was the trade to play for a probabilistic pullback in Carvana, right? So that's exactly what we did here on this day. You had mentioned, using candlesticks. So this is that key reversal day, right? So when you see a candle like this, it really confirms it, where you see Carvana open and trade up to a fresh new high or even recent high, right? But then reverse course and close lower on the day. And this one even better because it closed on the low of the day. This is a sign that the buyers may finally be out of ammo, right? The sellers are taking control. So this sort of candlestick always, to me, is a very good sign that exhaustion has taken place, to the downside as well. When you see a candle where you see a reversal to the downside, similar sort of thing as well. So hopefully that provides insight into kind of my philosophy here. I always use, as I say, fundamental. So I look at simple ones: price earnings, price to sales ratio. Carvana last time It approached 100 times PE, which is utterly ridiculous. You saw that you had this big pullback here. It was back up there again. 400 seems to be kind of a key point here. It bounced right off of there, as you can tell. We actually took profits down here when it broke through that 20-day moving average. So usually I'm happy to take out the middle of the move, right? I'm never going to probably catch the absolute high or the absolute low, but if you can take out 70% of the middle, you're doing just fine. And you can see we're right back at that 20-day moving average as well. So again, 9-period RSI, MACD, Bollinger percent B. I look at implied volatility and a 20-day moving average, bring in some of that candlestick, whatever fits what you like, right? Dojis are one of my favorite, right, which signify kind of exhaustion. And then I always bring in fundamental analysis as well. So hopefully provide some insight. Feel free to reach out with questions. Take care.